Hi, everybody. Welcome back to another edition of VC TV. I'm your host, Kyle Ellicott, and we are here to speak about next year, 2021. We're just a few short weeks away from the end of the year here in 2020. Thank goodness. The end of a wild and crazy, oh my goodness, year, but we're about to head into a very optimistic year and the beginning of an exciting decade ahead of us. If 2020 has shown us anything, it will be a framework or a springboard to spring us into this exciting decade in front of us as new technologies and industries begin to intersect in ways we've only dreamt of in science fiction, now becoming science fact. So get ready. We're going to talk all about what you need to know to be prepared in 2021 if you're fundraising as an investor or as an entrepreneur as well. But I've got a few fun facts I want to read out there as PitchBook just released yesterday their venture capital outlook for 2021. Some fun facts I think will be good for us in today's discussion. Number one, we talk about this subject a lot here, biotech. Biotech and pharma, in PitchBook's opinion, their activity will likely succeed, so go beyond, 20 billion for the second year in a row. All right. Established managers will increase overall VC fundraising to about 75% for first time. All right. SPACs will decline next year. TBD. We will see more venture-backed exits over $1 billion next year. All right. Seems on point. And the wild card, the Bay Area. Gary, get ready. This one I know you're going to have some comments on as well. The Bay Area will fall below 20% of US deal count for the first time. Okay. All right. And with that, we've also got one other, and that is venture debt, something that Jose talks a lot about. Venture debt will continue to string along at record years and highs, surpassing over 2,600 deals and $25 billion for the fourth consecutive quarter there. So fun stuff. PitchBook has an enormous document, about 22 pages, definitely worth the read if you haven't, looking at what's going to happen here in the venture capital community over the next year. But instead of reading that right now, pay attention to us because we're going to dive in and talk about it live. With that, a big thank you for tuning in. If you like what you hear, click subscribe, give us a thumbs up. Do reach out if you'd like to be on a show like today. But by clicking that subscribe button, you tune in all day, every day to all episodes of VCTV as we bring together the best and the brightest from around the world to share with you the thoughts and insights and on-the-ground perspective of technologies, industries, and regions around the world, how they are intersecting, and what you need to know to be successful, either investing or building in these categories. And a big thank you to our entire LA Token team and to Maria for making VCTV possible so we can all be brought together to share with you these subjects. And entrepreneurs, you have a virtual stage here at VCTV to pitch your company and product and service on. If you're interested in any of these opportunities, reach out to us and we'd love to find the right spot for you. With that being said, let's go ahead and kick it off. Jason, welcome back to today's show. A little intro, a little background for everybody.
Great. Well, thank you for having me back. Appreciate it. My name is Jason Jacobson with Propellant Ventures. We are a seed stage venture capital fund that invests in a growth of Chicago and the greater Midwest across B2B industries such as healthcare, future work, fintech, edtech, and supply chain. And I've spent over 20 years working in the entrepreneurial and investment communities throughout the Midwest of the US. So I have a unique vantage point in a lot of the activity that's happening in our region. Glad to be back.
Wonderful, and glad to have you here too and providing that perspective. There was an awesome article that Fred Wilson, one of the founders of USV, Union Square Ventures, put out yesterday, and the idea of the rise of everywhere. And all this talk about the Bay Area and what I just threw out there in the stats is what it's exciting, and what has happened here in 2020 is we've seen so many people move and migrate, and it's been a trend over the last decade that now we've got capital in so many more places that we're actually going to see some very exciting fundraising and also great companies being built due to that. And Jason's one of them as well. So a little shameless promotion for you, Jason. There you go. Jose to you. I was mixing Jason and Jose. It was going to come out as Jameson. So I put you two into a new person. Jose, welcome back. Man of many hats. A little intro, a little background.
Hi, Kyle. Happy to be here with all my friends today. So we have been on many shows. So my name is Jose Graca. I am a serial entrepreneur for a long time, became a business angel, and from business angel stepped into becoming a VC, and at the same time became a advisor for fintech investments for some venture capital firms, as well as government. I like to be on both sides. That's the reason for the several hats. And you can always approach me for investments or for advice. You never know.
That's true. You never know until you reach out. So it's a great point. It's also mentioned too, and we're going to talk a little bit about this from PitchBook, and we've all expressed our position on this too, is Zoom and the idea of virtual meetings and the ability to reach out to so many people, Jose, that the fundraising landscape next year will be slightly different in a more aggressive way because of these tools, people becoming more comfortable with that process. So we'll put a pin in that and come back to it. Adrian, welcome back.
Hello, Kyle. Hello, everybody. Thank you very much for having me again. So it's not time yet to wish Merry Christmas because we'll see each other for a few times until Christmas. My name is Eugen Niculescu. I'm an entrepreneur and an investor involved in a few projects. Cloudcoin Consortium, Cloudcoin being a post-blockchain digital currency, Faster Capital, which is a Dubai-based accelerator and incubator for startups, and also I'm a mentor in Richard Branson's Virgin Startups program in UK, advisor and investor in other projects. Happy to be here and to contribute.
Wonderful. Happy to have you, Adrian. Last but not least, the Grandmaster of Artificial Intelligence. A little bit of a pause for dramatic effect, ladies and gentlemen. Welcome back, Gary. Welcome back, Gary. A little intro.
That's great to be here, Kyle. So, I'm at over 650 VCTVs now, by the way.
Oh my goodness.
Just FYI, I've done a few. Anyhow, my name's Gary Fowler. I'm a serial entrepreneur. I built 16 startups, been involved in 2 unicorns. I love artificial intelligence. I am the CEO and president and co-founder of GSD Venture Studios, premier AI venture studio that curates AI companies from around the world and helps them go global. Still using Silicon Valley as a port because there may not be as much money forecasted for next year, but the connections are there. And the connections are also incredibly important. So that's what we do. And we're looking for companies. We have companies today from Indonesia, from Germany, Australia, Singapore within the portfolio. And we've, we're unicorn breeders. Our goal is to keep those companies moving forward. And that's it. Thanks, Kyle.
Absolutely. Thank you, Gary. And thank you all for joining us today as well. I tease in my intros, but it's an absolute pleasure. And Gary, our VCTV All-Star, it's such an honor to have you join us today. But
I'm just one of many of the All-Stars. These guys are much better than I am. I'm just a country boy.
We're all stars today. With what you ended on there, mentioning Silicon Valley being the port to the rest of the world, it's a good point. Back to my article mention of Fred Wilson's. That's one of the things that he mentioned in his article is that Silicon Valley will still be a central point for tech and for those connections, and also still the very largest concentration of venture capital. And as I look at PitchBook's numbers, I mean, in the Bay Area, again, this is due to a bigger trend that's been happening for many years. So we look at things on a global level where capital is being spent and being placed. It's very obvious why this trend is happening. Things are balancing out. But we were at 23% last year, 22% moving into this year, and 20% next year. It's just a slow decline because you've got the rise of capital in Asia and India. You've got capital explosion in Latin America, also throughout Europe in more aggressive ways. Here in the United States, again, to Jason's credit, you've got a huge amount of capital now in the Midwest, not just on the coast, but also in the South, and starting to become more relevant in the North, just above Jason as well. So we're starting to see kind of that balancing, that evening out as well throughout here in the landscape of the United States, which brings me to my first question. What does the fundraising landscape look like going into 2021, right? We look at all the factors here. So all of the research We look at the digital currency markets. So a little shout out to you, Adrian. We look at the public and private markets and how things have changed. We look at the global landscape. We look at the current landscape of startups, where things have come from over the year to what will be hopefully blossoming into next year. We've got new funds. We've got funds being planned. We have all this stuff happening. So to each of you, from your view, either as investors or those that are looking to fundraise, what's your view on the funding landscape for 2021? Jason, I'm going to start with you.
Yeah, I do not see a slowdown. I believe the last month of this year was a higher invested capital than last year. Now I realize some of that was some dry powder just sitting on the sidelines, and then as economy came back, there was a huge influx in investing. But there is so much money out there, and I believe this momentum is going to continue happening. I think this pandemic gave us a little bit of a hiccup, but it was not a financial crisis. I mean, for some people, yes, but it was a different kind of crisis, and the markets have largely come back. And I think certain industries, especially, are really going to get a lot of funding. Some of the ones that such as healthcare and other industries right now for future work. Ones that are fintech, ones that are really being impacted by what's happening around the world, and with some of the new activity. And some of that's just been accelerated. So I definitely see a continued investment, not only funds raising money, but also companies raising money. I don't see a slowdown at all. And so it's encouraging to hear what's happening at the end of this year to go into the next year. Obviously, with the U.S. election pretty much done, that will help accelerate some additional activity, I believe. So I'm very bullish about next year. With the vaccine too, there's a lot of positive things happening, and so it'll continue to accelerate all the activity.
I mean, to your point, this arguably is probably the busiest December I have seen, potentially ever, in terms of the venture side of things. I've seen less maybe fund announcements, in fairness, I think to some of your points, but I have seen a number of fundraising deals closed. I mentioned on yesterday's episode of VC TV, just before the episode started, I saw 5. During the episode, after I asked a question, I saw 3 more. And probably during that episode, I saw 12 announcements of capital being deployed in one single hour stretch. Now, some of these deals we know started a while ago and probably were announced later. That's all fair. But the activity and the momentum usually at this time of the year is slowing down. Instead, we're speeding up. Which, Jose, to you, what do you see as the funding landscape outlook for 2021?
Personally, I strongly believe that 2021 will be better than 2020 because of the ups and downs that we have been having. I cannot predict how much that will be, but I think also some new things will come on the market that have not been, let's say, in the fundraising area before. For example, like people being able to set up companies and build its companies from scratch without the need to go out and fundraise. And I certainly would like to see much more funds available and spread out, because the problem is like this: the amount of need that society has for entrepreneurs that are willing to put hands on to make things happen is very, very low. What I mean is that it's always the top of the iceberg. And we need to start thinking in spreading that iceberg a little bit out and getting it a little bit higher so that more people can take advantage and that we have more entrepreneurship flourishing instead of, losing every year like 75% minimum of all those entrepreneurs that are not making it. So I think crowdfunding was a very, very good add-on to that. So it solved quite some issues. And I would like to see coming back, may sound a little bit strange, but I think the ICO time, right, was a very good one, because in essence, you could see suddenly a lot of people that had made quite some valuations reinvesting their money, although they had no knowledge where they were going to invest into. They were believing that everything that they were see was for real. So they were investing, those valuations. I would like to see that coming back. I think it would be quite dynamic, and maybe because of Bitcoin is so high, maybe we will see, it's getting a little bit hotter to get those ICOs back. You never know.
Well, and on a flip side of that, the ICO model may also evolve. It should. It did. Hopefully, it will more. And so I think what you're proposing, I don't want to put words in your mouth, but what you're proposing is to bring that model back into the opportunity for people to do those types of fundraising. And the SEC, just as a reminder, right, to those here in the US, the SEC did up the ability to raise from non-accredited investors, and then changed what the definition of an accredited investor was. So opening up this fundraising landscape as we head out of this year, which means before you could only raise just over $1 million. Now you can raise around $5 million from those non-accredited investors, which opens up those gates, which starts to lay the landscape, I think, for what Jose is painting for an exciting 2021. Adrian, it's a perfect segue to you. What do you see as the fundraising landscape for next year?
First, I would like to say that this I've learned from a very, very rich guy. In life, we can control two things, weather and traffic. We can control everything else. So we don't know which will be the outcome of the current pandemic. We don't know exactly how will be 2021. What we know is what can we do to make things better. And to add something to what Jose was saying, I don't see quite a slowdown in the ICO market. If you look at the websites tracking the airdrops and the ICOs, there are many projects happening every week. And some of them have very nice airdrops. Of course, few of them are scams and are less and less scams than before. But of course, you need to learn a lot to be able to spot them. I see a very optimistic 2021. The next big thing can come from anywhere in the world because the democratization of success is here. You can learn just about anything if you watch YouTube. You can learn to be a savvy investor if you, let's say, if you read what Gary is publishing on Medium, if you watch VCTV, because the learning, you need to learn from the people who are more advanced than you are. And if you follow people who are practicing what they are preaching, so not just reading from the books and passing the information from there, slowly, you will be able to enter their brains and you will model their behaviors, so you will model their thinking patterns, and this is how you develop. And of course, the connections and the ecosystems, how are the ones in Silicon Valley, in London, in New York, and in other places are, and still will be very available. What will happen is that will be more accessible by anybody from anywhere. If those persons are bold enough to knock on the proper doors and to persist, because many of the doors will be shut it down in their face. So the democratization of success is here, just that you need to push, you need to do something, to work on it.
I like how you throw that out. We were talking about this pre-show, right? The opportunity to learn is so different today than it was even a year ago. Really, if you take advantage of it, and thank you for the shout out for VCTV, a shameless promotion, but or that corner. But nonetheless, it is true, right? We're seeing education happening in a much more aggressive way this year, thanks to Zoom rooms. But nonetheless, there's a lot more opportunity. And Gary, coming to you last on this one, what do you see as the fundraising landscape heading into next year?
Well, Kyle, so we got to look at this. And again, being a simple country boy from Pennsylvania, I mean, I look at things in a little bit different way, but look at where we are. I mean, you're in San Francisco right now. I'm down in Palm Beach in Florida, normally from Silicon Valley. But it doesn't matter really where we are today, right? So, and at the same time, I've already been in calls with, so last night with Australia, with Dubai, with Singapore. I mean, it's really it's limitless in terms of where we can reach for incredible technologies. And I wrote that article about the democratization opportunities. It's right on target, but at the same time, you still need the contacts, you still need the trusted network, you still need the history in order to be able to raise money. And if not, you're going to raise dumb money. And dumb money is not good. You need to have investors that can actually help. I love having boards where I can get advice. People can help guide us through the process because we all have the same kind of interest. That's some of the magic of Silicon Valley. And having that, decades of expertise, I mean, it surely helps. And those connections surely helps a company go global. So that I believe. So whether the Silicon Valley mentality is still going to be because of the pandemic in Palo Alto remains to be seen, but it's going to be out there and it's held with people that have had a lot of experience. So I love that. In terms of investing, I mean, think about it. The situation, as we've talked about before with artificial intelligence, we're inundated with data and we need to make sense of that data. And we need to hyper personalize. We need to create chat box. We need to get closer to our customers. At the same time, we're all inundated. Now we're in the situation for the last, since March, right? We did our first VCTV with you in a situation where we do have knowledge, which is, I can't even imagine, Kyle, if we wouldn't have things like VCTV and Zoom over the last few months, how people would have reacted, because there would be very few ways to connect to one another. So the backbone of being able to connect is important, and develop a relationship with a lot of the folks right here on Adrian, Jose, yourself. It's just everybody here actually developing those relationships are critically important, because that's stage one of doing deals together.
Well,
and I can't tell you, I just want to say, I can't tell you how many times, Kyle, like I've met people here that have been some of the richest people on the planet Earth that come in undercover, or they're representatives for those people. And I follow up with everybody all the time because I'm interested in people. And I have dug down, and you can't imagine who I've met. It's when you go 1 degree of separation away, you're dealing with one of the richest families in the world, right? So it's a great time. But the thing that we need to understand is that we need to adapt to this change. This is still going to be a hybrid model coming out of it. We've now gotten used to be able to go through this digital transformation and to meet people differently. And imagine how much more power, if you harness the power of this transformation, how much better you are, right? It's incredible. It is absolutely incredible. I mean, I'm working, I have an office in South Africa now. I never would have done that. Jakarta, Indonesia, Oxford. I mean, it's just spread me out, and I've had to think differently. I was really focused on Eastern Europe and Russia, and I decided to expand out, and it's purely because of the pandemic that forced me to do it. And now I love it. It's the greatest thing to happen.
It's a ton of fun. I mean, we're everywhere always without having to leave anywhere. And that's Jason, I want to come back to you. I mean, one of with the Founders Institute, you host these or co-host these virtual meetups, working to bring people together. But when you look at 2021 and the funding landscape or fundraising landscape, do you see more fundraising happening through virtual settings, whether it's through meetups like you're putting on, or like this in the Zoom? Do you see this becoming a hybrid model, or do you see this becoming pretty much the standard of how you're going to get your deals and do your deals in 2021?
Yeah, so the fund I was at prior to Propellant Ventures, we did almost everything virtual. We met most of our investors virtual and found all our opportunities that way. We used Zoom, but we rarely used the video part of it back then. It was just a conference bridge. So I'm used to doing it this way, but the things have changed. It's a paradigm shift for some of the old line VCs that have been doing this for a while, that they're not meeting people in person anymore. And I think what people are realizing, it's more efficient, it's more effective, and you're saving money and time. And I still believe it's important to meet people in person, but it doesn't have to be a priority for every single opportunity, whether it's for investors coming into a fund or investing into a company. I believe, as Gary mentioned, there will be a hybrid approach going forward, but the virtuality and remoteness has been accelerated, and it's been more accepted at this point. It's a lot cheaper to not have to fly somewhere to meet someone, and especially if you're investing in tech, there's not much you need to see in person. Obviously, you want to meet the team and the people, see how their office is, but most tech firms are remote anyways, or distributed workforces. So unless it's a physical product that you're investing in where you want to see a factory or some type of facility, you don't really need to meet people in person. Now, I still believe, seeing the whites of people's eyes in person is important. You can just understand how their demeanor is and how they interact and see things in person that you may not be able to see visually on a computer screen. But I do believe this is accelerated the investing and raising money virtually. So there's lots of different platforms for that. And I believe that will continue to grow.
So with both, actually a question for follow-up for you and for Gary. Gary's got a new fund that he's putting together. You've got Propellant is also a new fund, and you guys are fundraising as well. For both of you and your mandates, is there anything that you've put in there about doing meetings virtually or physically? I mean, is that part of your diligence process, or does it not even include anymore? That again, you can just meet someone like this, do the deal, and move forward.
Yeah, I mean, this is how I did due diligence previously with the last fund I was a part of. I rarely ever met anyone unless they were in my backyard in Chicago, basically, or the Midwest. So it's not something that's in the charter. It's just part of what I know, and we'll continue to do it that way. I'll meet companies if it makes sense, and of course, I think meeting investors is probably more important than meeting the companies. But I will do it when it makes sense. I mean, I was meeting with people in person before this all started, but I was still having remote conversations at the same time. So, it's nothing's going to change much for me other than I will try to meet investors in person a little bit more.
Mm-hmm. Well, and I have a follow up to that, but real quick, Gary, any thoughts on your new fund? Is this in terms of the virtual meetings? Is this something that's a part of your mandate, or do you see this is just commonplace in terms of diligence?
Are you talking to me, Kyle?
Yes.
Yeah. I mean, the thing is commonplace. You don't have a choice.
Mm-hmm, mm-hmm.
And so, I mean, it's just standard practice. I mean, you can't be a dinosaur, in this new world order. And the other thing is you need to do it quickly, because once people figure it out, everybody's going to do it. It's going to be a hell of a lot harder to get to people and to get their attention.
So that's actually part of my follow-up for all of you. So going into 2021, as VCs and angels, there's going to be two parts of this side. So feel free to answer respectfully. As VCs, we're mandated usually by the number of investments that we want to make per year, right? 10 to 15, whatever it may be, right, depending on the fund size and the thesis. As angels, it's your call. But nonetheless, everyone has their kind of amount they want to do. Do you see in 2021, based on getting a little bit more comfortable with this and the explosion that we're going to talk about in technology, that you'll end up doing more or less deals because of the ease of access? I mean, right now you could do deals for days. I mean, you could do 3 deals a day with this virtual meeting, as Jason mentioned, not even having to get on a plane. It's incredible. So to each of you, do you see the opportunity to do more, or will you continue your same pace? And I'm going to start with Gary.
Yeah, I mean, the situation, so it'll be probably a little bit more, but the quality of the deals will be a lot better. Mm-hmm. Because I'm sourcing them in a wider swath. So I would say right now that in terms of the pool of opportunities that I have today is probably 7 or 8 times what I did at the beginning of the pandemic, because my geography is a lot wider than it was before. And I'm finding opportunities in artificial intelligence in places I never suspected. Nigeria, South Africa, different parts of Australia. I had not expected it to be at the level that it is. and Singapore, right? Very, very sophisticated opportunities. So from my standpoint, a few more, but the pool, let me tell you, Kyle, it's a lot harder because it's such a wider pool. I mean, I'm on the phone at 5:30 and I'm online phone. I'm on Zoom at 5:30 in the morning. My last call is at 11 o'clock tonight. And so, which will go to probably 11:30, 12 o'clock, and then I'm back up doing it again. So my time of working has dramatically shifted, and I'm much more efficient because I don't have to travel. So, you know, the amount of work that I'm doing is a lot more than before. And it's just a different way. I'm just not killing myself getting on a plane and, you know, flying to Moscow or to London or back and forth to San Francisco or wherever. I just don't have to travel. I mean, I look at my travel. One year I did 300,000 miles, you know, and that's a lot of traveling. So the good news is we get much more efficient. It's just that we got to look at a lot more deals to come up with the same number, but the deals are of higher quality than they were before.
Great point. Wider net, and now looking at new regions, new opportunities. Adrian, and then Jose and Jason, all three of you, I'll come to next. Adrian, to you, same question. 2021, do you see the opportunity that you'll be doing more or potentially the same amount of deals? How does that thesis change for you looking ahead next year?
I will look more on the quality than quantity, because as the risk is big, especially with early stage investment. I will prefer to do more quality and less volume. They said my activity was global before that, and of course sometimes I miss my 4 a.m. Coffees in the business lounges, and every flight from Europe to US is like a small party if you have the proper jet line. But besides that, of course, I'm focusing on doing more calls, on connecting with more people, trying to add more value, and to see, of course, what can be done better in order to help and sustain the ecosystem. So I would say more focus on the quality, and of course, the quantity increase will come by itself based on that.
And thank you, Adrian. Jose, same question to you. How is your thesis changing going into next year? Are you looking at doing more or about the same deals?
I'm looking about doing much more deals, really much more. So you can look at it from 2 points. You can look at it from the perspective of the quality of the deals. And then obviously you need to invest in less amount of deals, because everybody knows that you need to invest in X amount of times to filter out what is going wrong. Or you can invest in a huge amount of deals, right? And you eventually get the same effect, is that you have maybe less quality, but the volume will compensate. Look at it like this. When you have a pool of fish together, right? And it sees a predator, what does it do? It combines together, right? Because the predator cannot eat everything up in one shot. So an X amount will survive. So I definitely am on the lookout to solve a problem. And the problem is that, you know, I cannot accept that, you know, more than 99%, I can tell you, of all stuff that's out there with a lot of talent just doesn't get any opportunity, will not be able to get to any funds. It's a very, very hard game. If you don't have the network, you don't know how it works, it's like a mission impossible. That's the problem. It takes a huge amount of time for any entrepreneur to understand and learn. And this is something that somehow needs to change, because otherwise we are not serving society as it should be. And I understand that everybody is worried about not losing the money. That makes sense, right? But we also need to be worried about how to educate all those entrepreneurs that are out there that want to make it happen. And nobody is perfect in this life. That's the issue. So, you know, give a little bit more people some more chances.
Absolutely. And I mean, again, VCTV, shameless promotion, but there's also a ton of resources out there. You would be shocked to realize how many resources are available for free out there in the world if you're an entrepreneur, or if you're an investor as well, looking to raise your first fund, or a family office looking to make bets in certain new areas. There's tons of resources out there as well. So To Jose's point, there's plenty out there. It's the next step, right? In terms of that education, just because you watch the video, and Adrian mentioned this too, just because you read the book, it's the next step of putting that knowledge into action. And a lot of that comes from lessons learned. No one's perfect, as you said, Jose. Jason, to you, the same question. I mean, it sounds like you've already answered this, but I just want to come back to you if there's anything else. I mean, going into 2021, has your thesis changed at all? Are you looking to do more or about the same amount of deals?
About the same level of activity will happen. I mean, part of it depends on how much capital we have available to invest, but my activity is going to be on the same pace that I anticipated. Still have to do due diligence. It still takes time to do that. And so the acceleration of doing more deals probably won't happen, but I'm talking to a lot of entrepreneurs, but I would say that I will accelerate some more conversations going next year as we have more capital to deploy. But the level of activity for me, at least my initial thought, probably won't change at all because I've been used to doing this virtual anyways. So I don't see many changes there. I'd say there is a good high quality amount of deal flow out there, especially in the region that we're focused on. So I will probably be looking at more good quality deals, but then obviously have to decide on the right opportunities. But yeah, I think it'll be about the same activity, at least I initially anticipated.
So let's talk about opportunity. What's getting you excited heading into 2021? I mean, I know you have a few focus areas, including ed tech and fintech, but where do you see the big change, the big opportunities going into next year? As people are looking to start making investments or start building into new industries, where do you see the tech really getting exciting next year? We'll start with you, Jason.
Yeah, one that's to me is very interesting is future of work. I mean, we've heard about it for a while. It's been accelerated, and that can encompass a lot of different types of solutions, whether it's virtual meetings, whether it's events. HR I would include in there, tools to help businesses work more remote. The acceleration of that is going to continue, and people do want to go back to physical office, but it's not going to be probably a hybrid model. Mm-hmm. I think there's an acceleration of that. And the virtual event platforms, just a couple companies raised hundreds of millions of dollars recently. So that those types of technologies will continue to accelerate. I think there'll be some validation probably too. There'll be some big winners in that space. That's interesting. That some of that's cutting edge technology, or at least and it's pretty to interact with individuals like that. Really different Jason, type of experience. I've talked to.
Yep. Sorry, we were losing you for just a minute. So I think you're back. So it sounds like future of work, virtual events are areas that you're getting excited. You maybe want to throw in one more. There's a lot of choppiness
HR
there,
tech.
so I want to make sure. HR tech.
HR
All right,
tech.
there we go. So we're going to pause you for a minute, let your internet come up, and then we're going to come right back to you. So hold on just a moment around this virtual event space. Jose, to you, areas that you see exciting going into next year, technology-wise, that you're focused on.
Definitely on converging technologies. And those converging technologies is a combination of a lot of things we already talked about here, which is artificial intelligence, machine learning, neural networks. But not only, it's also the converging of social marketplaces with social networks and messaging systems and business process automation and finance in one shot. So that's where I'm looking at to call it a super app. And that's eventually where everything will go to in the next 10 years in technology, more or less. And depending on if we're going to get this quantum computer, yes or no, nobody knows in fact when it will happen. I think we are very close to getting the raw material that will be able to make it happen, because it's already available, just need to be applied. Then definitely we're going to see some miracle happening into our lives, in essence that, everything is going to get into a 1,000-fold or more, a billion-fold speed. And if that happens, then we are going to have a new generation of individuals, completely new, that basically don't need to think that much anymore. in essence, that they need to be able to make good decisions. So that's where I'm focused in. On a investment area, I want just to focus on one small thing, and then I'm giving it over, is that the due diligence for any investor is a big headache. It takes time. It takes a very long process. So what I see is, and it's something that we have solved within BizMoney, is that we know who you are better than you know. So you don't need to go through that due diligence process because we have already filtered you. We know exactly what type of person you are. So once we know that, right, then you get automatic either investment or let's call it after venture debt automatically. There is no due diligence needed because once you know the finance profile of somebody, his behavior, the network that he has around him, all that data, then what do you need anything more, right? That's what he is. So last message to the entrepreneurs. You have something very powerful in your hands that is very, very bad explored, which is called equity. The investor that comes on board is buying equity. So why are you not getting people on board and giving them equity? Because you either go out and raise funds and you give it out on payroll, or you can just get them on the payroll and give them equity. It comes at the end, it's the same outcome. You want to get the job done. So think about it. Instead of going out raising all that huge amount of money, try to give equity to people, come work for you, get your company more valuable, and then after that go out and raise those funds, because investors will be more interested in getting those, let's say, screened and valuable deals. That's my suggestion.
Mm-hmm. And Adrian, to you, where do you see the areas of excitement going into 2021 from a technology perspective?
First, I would like to add something to what Jose said a few minutes ago about the inequity in the market. We are trained by the media for instant gratification, so to live for the weekends and for the holidays. So the culture of work needs to change. In the rules of wealth, it's mentioned that 2% of the people own 90%, 98% of assets, money, and businesses. So the rest of 98% of the people struggle for the 2% of the money left. So I see a lot of opportunities besides what I'm saying about fintech, crypto, real estate, and the entertainment industry, in how we can work better, how we can become more producers than consumers, because it's essential for an entrepreneur to be more productive, to be a producer, not a consumer, to be able to have the tools so could elevate its mindset and become part of that 2% at the end of the day. So tools like Zooms and others which will appear, and we mention all the time LinkedIn for our communication, but I don't see yet a big challenger for LinkedIn. I would like to say, okay, you can find me on LinkedIn and that one. There isn't an alternative for LinkedIn right now. Mm-hmm. So even here is a huge opportunity, and hopefully we'll see that alternative. Maybe I will be able to involve also, at least as an advisor, or to help the project. This is my honest point of view.
It's a good one, and there may be one to come in 2021. We'll have to wait and see. And Gary, to you, where do you see? I mean, AI and quantum we know, but go a level deeper on those if you throw them out there in terms of excitement for 2021. What should we be really looking at in those areas and others from your perspective, from an investment and building standpoint next year?
Well, so look at where we are. I just did a panel 3 weeks ago, a month ago, on drug discovery and artificial intelligence for the top pharmaceutical companies in Europe. So look what has happened with COVID. Not a lot of people realize that Pfizer used Watson's artificial intelligence to help reduce the bench time for the discovery of the vaccine. And the top 3 companies that are out there with the vaccine was Medora. They used AI too. So they used it's just the future. Why would you use bench time when you can run the models with artificial intelligence. So I would look at ways that we can make systems much more efficient and effective. In terms of robotics, we've talked about this, the current situation you're in out there, the toilet paper thing we laugh about, but the supply chain's broken and it hasn't been fixed. And so we need to be able to have a view into the supply chain to be able to optimize it all the time so we can get the right products, the right place at the right time. The idea of just-in-time inventory that we've been talking about for years just doesn't work during the pandemic. So there, remote workforce management, I started one of the top companies in that particular area, Eva. And so I can tell you directly, our business is up 38 times from the beginning of the pandemic. And of course, look at all the workers that are out there now. And now companies realize they don't have to be in Silicon Valley. They can be anywhere. Look at Oracle. They just relocated their headquarters to Texas. But at the same time, many of the companies are allowing their employees to work remotely. So it keeps their costs down. The employees many times are more happy about it. They're happier, even if it's a hybrid model where you come in the office once or twice a week. So, but then, you know, my one of the companies that I know, top insurance companies, they're allowing their employees to work home, but now they have a device underneath that they have to install in their notebook so they can watch them. They can look at their behavior.
Wow.
So it's a little bit different. So now they're monitoring. And then what we do, you know, what we do with Eva is we go out and what we want to understand is what the sentiments are, how that particular employee's feeling, what are the interconnections that they have with other employees in the organization. So you have basically a pulse as what's happened in your company at any point in time. So you can instantly understand what needs to be done, how productive people are or not, what their level of productivity, who they're dealing with, what their customers are feeling about them, and become an intelligent assistant. One of the things that I found with Eva, and again, this remote workforce management, is that if you have a system like this on and you get the reports, people become much more productive. Once they understand that if you gamify it and let them compete with one another, they can become very productive.
Well, and that gamifications, it creates a new level of encouragement and hopefully the right type of competition, and again, teamwork within that organization as well. But to each of you, as we come to close here, I want to come to you each for closing thoughts. Your last moments of words for 2021 here as we come to close today's episode, and then also where you can be found online to continue the conversation. Jose, let's kick it off with you. Closing thoughts, where can you be found online to continue the conversation?
My closing thoughts for today is that, in my opinion, equity will be the new cash, or you can even call it like the new Bitcoin. I think we will get some surprises on that in 2021. And that is a real backing. And that's where my closing thoughts are going. And I leave it up to this point. We can discuss it in another show. And you can find me on LinkedIn under Jose Graca, or just search up BizMoney and you will find me certainly. Contact me. I'm an open network, always open to give you some advice or help you out, or, you know, invest into you. Depends on what you have to offer.
Thank you, Jose. Adrian, to you.
For a startup, by closing thoughts, for an early stage startup, it's very difficult to impossible to hire some amazing people as advisors and even to do some jobs based on payments in cash. But if you give equity in a project to people who are at the top of their game, but they have this risk taker type of mindset, you can find absolutely amazing people who can allocate few hours a week or more to work on your project. And don't be afraid, entrepreneurs, to do that and to reach out to fantastic people which will place a bet on their time, their energy, their name, which are more valuable than money, to maybe, and everything, including work, is added at the beginning with a huge risk, and maybe in the future that equity will work for something. So these are my closing thoughts. Don't be afraid to give equity to the right people and build fantastic companies. And of course, My main communication hub is LinkedIn until something better will be invented. I'm happy to answer all messages and to help as much as I can. Thank you very much for having me here.
And for those who use TikTok, Adrian is on TikTok looking to grow his following. So I will throw another social network in there for him. Look him up on on LinkedIn, but also TikTok. And I'm not going to let him finish. Just look him up on TikTok. Jason, closing thoughts? Where can everyone find you to continue the conversation?
I think there is going to be continued growth next year. There's a lot of money out there. There's continued acceleration with technology hitting some of the industries that have been impacted the pandemic. And, I'm very encouraged about what's going to happen next year. There's going to be some more unicorns coming next year, and there's a lot of capital going into underserved and underrepresented founders. There's just so much money out there that I think next year will be a record year because there's a lot of pent up capital and it's starting to flow this last month. So I'm excited about next year. And people can reach me on LinkedIn or my email, jason@propellant.vc. And thank you for having me, Kyle.
Thank you, Jason, Jose, Adrian, also for joining us. And last but not least, thank you, Gary. But before we close out, your closing thoughts, sir, and where can everyone find you online?
Yeah, so I believe this is the greatest time. We talk about AI as the new electricity, but I'm speaking to these companies these startups from all over the world, and I'm encouraged that the level of the startups and sophistication they have. So I believe 2021 for me, and my company will be a great time. But you can't think positively, focus on the solution and not the problem. The dark times have people around you that can support you and help you move forward. And guess what? I've been around this many down times, down cycles, financial, .com burst, et cetera. We've gotten through. In fact, I did an IPO right after the bubble burst. We did an IPO, and 17 months ago, the company was sold for $1 billion plus. So it's not, think positively and get this stuff done. The difference between success and failure is about this much, right? It's a very, very thin line. But if you keep positive, have a good support group around you, have incredible technology and a team, you can get the shit done. So you can contact me on LinkedIn, on Twitter. You can email me, gary@gsdvs.com. I'm looking for incredible AI companies that are going to dominate the universe. And so come on in. Thanks, Kyle.
Absolutely. Thank you, Gary. And as Wayne Gretzky said, you miss 100% of the shots you don't take. So to that point, get ready, take the shots in 2021 and have an exciting year. But we still got a few weeks left and a few more episodes of VCTV before we jump into that 2021. So get ready as we continue conversations, breaking down different technologies, industries, and regions around the world. So you get the on-the-ground perspective of what's happening as we close out the year and get ready to kick off another. And again, thank you, Jason, Jose, Adrian, and Gary for joining us all today. And if you like what you heard, click subscribe, give us a thumbs up. Do reach out if you'd like to be on a show like today. Thank you, Adrian and Jose and Jason. We'd love to have you. And also entrepreneurs, if you'd love to join us on the virtual stage here at VCTV to pitch us your company, product, or service in this new exciting virtual event environment. Also get real-time feedback, build foundational relationships with us virtually, and get exposure to our entire live audience, reach out. We'd love to hear from you, and we'd also love to have you join us on our virtual stage. And a big thank you to the LA Token team and to Maria for making VCTV possible every single day, all day, on all devices and all screens around the world. With that, I'm your host, Kyle Ellicott. You can find me and all of our investors today online 24/7, 365. You can find me at Kyle Ellicott and LA Token at latoken.com. With that, we'll be back here more VCTV tomorrow.